Good morning. I'm Pete Najarian. This is the take on this Thursday morning. And I got to tell you something. Every day I've said this for the last 4 or 5, but it's because I haven't seen anything like it in quite a while. Well, we have seen some crazy markets. Just to give you an example, if we look back to yesterday, how about the fact that when you look at the Dow itself, we came in yesterday, we looked like it was going to be a big rebound kind of a day. Things started off very strong. We had a nice move to the upside. We recaptured 35,000 on the Dow, and then we turned and we burned, but to the downside. And the flip was incredible, almost or about 1,000-point move from the highs to the lows. And we closed not too terribly far off of those lows. We were actually down 460 points on the day. All of that having to do, of course, with the release of the idea that the variant had now entered the United States. That sent everything into a different world than we started the day off with. It was something that was going to happen. We had to have known that, but it just shows you sometimes these things are priced in, sometimes they're not. The NASDAQ, sort of a similar kind of a day. It was nearly a 600-point drop for the NASDAQ from highs to lows and finished close to those lows. That was down about 280 points. Just a really wild ride of a day. Every single sector yesterday, and I said this on the take, every single sector was in the green early yesterday. And then that changed. And by the end of the day, every single sector was in the red, except for utilities. People oftentimes, if you didn't know this, but people oftentimes will go to that area when everything else looks terrible. They'll jump on those utilities. So we did have something in the green, one sector, and it was the utilities. So not all that impressive, and an incredibly big flip to the downside. We had crude just continues to plunge and get lower, and it was around 65 yesterday. We had the 10-year around 1.4. We had volatility absolutely spiking to very monthly highs. I mean, we're talking about multi-month highs for the volatility index, no doubt about that. 22 to 32 was the range, and that's a pretty incredible range. It closed around 31. It was up about 14, 15% on the day, just an incredible day for volatility. We look over at industrials, and there's one name that stood out because the industrials were definitely getting punished along with every other one of these various sectors. But it was Boeing. Boeing was down about 5% yesterday, definitely dragging on things for the industrials. Moderna down about 12% yesterday. We had Salesforce off of their earnings, and we also had all that put buying. And what do you know? Stock was down about 12% yesterday. So the combination of what we were talking about just at the start in terms of, all right, the nervousness is there, and that is what fuels volatility. But it also fuels a lot of the different selling that you can see across the board, like we did see yesterday in the airlines, American, United, Delta, all getting hammered to the downside. Then you look over and you see the cruise ships getting hammered as well, CCL. You look over at Norwegian, those names under pressure. Then you look at the casinos and you look at names like Penn and Caesar. And that, even with a lot of that pressure that we were seeing, we did see some bullish buying across the way, and it was interesting. As a matter of fact, in one of them, it was a casino stock. It was MGM. Today, after seeing some of that unusual option activity yesterday, despite the fact that things were getting hit to the downside, a really nice rebound from MGM and signaled by a lot of that call buying that we had seen yesterday. Tesla, that was under a pressure too, down about 4%. Zoom, DocuSign, you get the idea. Pressure everywhere. Vertex is one name that did stand out. That was a name that was up 10% yesterday into this whole thing for all the obvious reasons. We had jobless claims numbers coming out today. We had a nice jump in the pre-market. We were up about 200 points on the Dow. We were still down in the NASDAQ. NASDAQ getting dragged down by Apple. A lot of talk about supply chain and maybe oversupply and not as much demand as possible. That's something that I think, and we've heard some of the guys on TV today talking about this, some of the analysts talking about, really tough to tell right now. Really, really tough to tell. So is that the case? And is that why the stock is down? Well, if that's the case, then the stock is legitimately probably down after that big run. 2 new highs yesterday at 170 for Apple. We got the 10-year around 142. We had crude started the day around 65. And then as we hit, we just absolutely got stroked down to 63, 64. We bounced back, now sitting in the 65s once again for crude. So basically getting back right where we closed from yesterday after a little bit of that pressure that we had seen on things. Consumer discretionary started off pretty good. That got hit. Look at the financials. They started up. They started to continue to move to the upside. A nice move, about 2% to the upside. Some of what is fueling what we're seeing happening with the Dow right now. Last I looked, the Dow had been on a stair step after starting off the day about 200 points to the upside, then 240, then 260, then 300, then 400, 470. That's the path that we have been on today. I don't know where we are right now, probably closer to 400, 430, but a really incredible move for the Dow, a nice bounce back. Not seeing, well, we are seeing a nice bounce back, but we weren't seeing it early on with the NASDAQ. As a matter of fact, NASDAQ was under some pressure. Then it started to flip. It started to sprint to the upside. You had biotech definitely fueling that, along with semiconductors. Tech kind of lagging nonetheless. But we were up over 100 points early in the NASDAQ, and then we gave that back and went into the negative territory, bouncing about right around flat and some a little bit of green, a little bit of red, just bouncing around a little bit right now for the NASDAQ. Every single sector early in the green once again. So we'll see if we can actually hold on to that. I talked about the biotech, that really flipped. It was up early on, about 1.5%, actually went into the red. Semis were up about 0.5%, maybe a little bit more. That flipped down about 0.5%, maybe a little bit more. Tech, as I say, has been lagging and continues to be a laggard. So we'll see how the NASDAQ, and we've seen this in the past where we've seen this dislocation, the NASDAQ versus the Dow itself. So we'll see if that continues. And by the way, huge part of what we are seeing right now in the NASDAQ, specifically on the tech side, is, of course, Apple. Throw in a little Micron and you get the idea. So Kroger up about 8.5%. We've been talking about a lot of unusual option activity that has been hitting over the last week or so in Kroger. That stock making a pretty nice move to the upside, but it did take some hits along the way, along with the rest of the market. Wynn, MGM, I mentioned MGM, seeing a nice little lift out of those casino stocks. You're also seeing a nice lift out of some of those in the airline world as well, with Delta and Southwest, some of those names up like 4, maybe even a little bit more than 4%. Cruise ships up more than 4% as well. You look at CCL, you look at Norwegian, nice move to the upside. Peloton starting to do a little bit of a reverse, and Okta, another one of those incredible growth stocks. That stock up a little over 10%. Looking at hotels, they're up as well. Marriott on this big flip that we are seeing, Marriott up about 3%. So not everything is bad, not everything is good. You got Apple that's moving to the downside, Micron moving to the downside. You also a little bit of pressure on Dollar General moving to the downside by about 3%. So we got two unusuals for you, and I will be on the halftime report today with the gang, with Scott and the whole gang. Looking forward to that. We got some really great guests along the way as well. Should be a lot of fun. So before we get to that, two unusuals. Very first one, General Motors. I brought this one up because we've been talking so much about all these EV names, and let's not forget, obviously Ford and GM, they've got their piece of the GM world, of the EV world as well. GM trading just over 60, about 60.5. We had a buyer of 4,400 of the December 10th expiring 59 calls. Now, why would they buy an in-the-money call? A lot of the time when we see something like this going on, they want that delta. They want to have the movement. They want to have something that's going to move a little bit closer to what the stock moves to the upside, but nonetheless, a very bullish buyer. They paid about 215 when they started. They finished by about 270 with the buying in GM, 4,400 of those. Microsoft stood out as well. Now, we have seen a couple of different days in a row now where we've seen some call buying in Microsoft. Microsoft getting hit a little bit today, along with Apple. So when the stock was trading around 329 all the way up to 333, we did see some buying though. 9,000 of this Friday, that's tomorrow, expiring 332.5 calls. Now those are going for about $1.80 all the way up to about 350, depending on where the stock was from the start. As those also started to get a little bit more implied volatility, that starts to push a little bit because of the supply and the demand. The guys are willing to start to push those numbers up to see how much somebody's willing to pay. So that's exactly what we were seeing. $1.80 all the way up to about 350 for those 9,000 calls. Folks, I will see you on the noon show today. It should be a pretty exciting show. A lot going on. The markets are absolutely on fire. We'll have to see where they are actually come noon. We got a couple hours. We'll see what happens. Have a great day of trading. I'll see you tomorrow.